Okay, welcome to another video. If you're interested in finance at all, if you're interested in investments, this video is absolutely going to blow your mind just looking at numbers. I've spent hours kind of collating all this information and putting it together for you. And it's talking about investments and it's talking about property and why I'm getting into property. Somebody asked me a couple of weeks ago why I'm getting into property and trying to get into it in a big way. I was trying to kind of explain to them and kind of tell them the numbers off the top of my head. But until you see it actually written down, you will not believe this. You need to stick to the very end till you see the numbers that are involved in this. So what I was doing over the last couple of years, I've become obsessed with how the rich, how in the hell do they get richer? How do they do it? Do they get tax breaks? Do they not pay their taxes? Do they tax evade? How do the rich get richer? It just totally baffled me. So for the past couple of years, I've become obsessed with that question. How do the rich get richer? And I've become obsessed with finances. So much so that I got into cryptocurrency like 5 years ago, but I was kind of playing around with it. And then I really got into it. And I made a lot of money in cryptocurrency. And now I'm putting that money into property. And I'm going to show you exactly why I'm doing that. I'm still in cryptocurrency as well. I've still got money parked there. It's very risky with crypto. But I still totally believe it's going to come to the fore and really be a force to be reckoned with. So I'm putting money into that. I've got money into that just now, so I'm not getting out of crypto. But all the other investments I looked at, gold, silver, kind of savings accounts and kind of index funds, I'm going to share that with you here. So what I'm going to do, just to set you up with this, what I'm going to do, I'm going to say, okay, what would it be like today if I had invested £60,000 back in 2000, the year 2000? Because now is a brown time to buy property, now is a brown time to invest in yourself. But I'm going to show you historically why it's good and why it's as good today as it was back then. So I want to give you kind of real world figures to show you why property could be amazing, and you might want to look at other kind of investments as well when I show you the quick figures on them. So what we're going to do first of all, we're going to jump over and say, okay, what would happen if in the year 2000 you had £60,000 from whatever, from your investments, from kind of a house sale or from inheritance or anything, you had £60,000. What would happen if you put that into a savings account? What would happen? So you put it into a savings account and you get 1.5% AER on average. If you put it into an index fund, you're going to get, in the UK it wasn't that good for index funds. If you kind of follow the FTSE 100, although they say the stock market has gone up 12% year on year, it's not really. FTSE 100, if you look over it over the last 20 years, it's not done that brilliant annualised. So we'll say 5%, that's a generous 5% if you put it into an index fund. And you have to account for inflation as well with the savings and the index fund. With gold, what would happen if you invested £60,000 worth of gold at £180 per ounce back in the year January 2000? You'd have got 333 ounces. Now you can't adjust for inflation for that because an ounce is an ounce. Same with silver. £60,000 would have bought you would have got you 18,987 ounces of silver back then. So the year 2022, August 22, what would that be worth now? Your savings account from £60,000 would now be worth £43,000. You would have lost £17,000 had you kept your money in a savings account from the year 2000 up until today. And that's adjusting for inflation at 3% annually, an average of 3%. The index fund, from £60,000 to £93,000. Again, that's adjusted for inflation. And that's been, I think, overly generous with the index fund. Had you invested in the S&P 500, that would have got you a much better return. If you're allowed to, if you could have invested back in 2000 into the S&P 500 index fund, you could have got a much better rate of return. Gold, if you look at gold, if you invested £60,000 in gold back in 2000, January 2000, it would now be worth £493,506. That is brilliant. That's nearly 1,000% increase. 1,000%. Silver, invested 60,000, it would now be worth £299,517. It's a 600% increase. However, I have to say, in April 2011, if you'd sold that silver that you bought in 2000, it would have been worth £600,000. But it's all about timing. And it's like cryptocurrency as well. You could say if you'd bought £1,000 or £60,000 worth of Bitcoin back in the day when it first kind of came out, or if you bought it £1,000, you could have got 60 Bitcoin. It would now be worth a hell of a lot. It'd be worth 1.2 million. It just depends when you buy and sell it, obviously. So we're going to discount crypto just now because that's risky air. We're talking about safer, or supposedly safer investments here. So your savings accounts and bonds, they're supposedly safe, but they're going to lose your money. Same with the index fund, is going to give you a little bit of money, and that's probably okay if you just want to just gain a little bit of money. You don't want to really actively manage it at all. Same with gold and same with silver as well. And I have to say, you do have to pay capital gains tax on gold and silver unless you buy, for example, the Silver Britannia or the Gold Britannia coins. So if it's currency, you do not get charged capital gains tax. That's why you're seeing so many videos on YouTube about buying the kind of silver dollar and buying the Silver Britannia or the Gold Britannia coin as well, because it is currency you can spend. It's legal tender that you can spend. So you wouldn't get charged capital gains on that. So, brilliant rates of return. And then I was looking at property and I thought, okay, if you had £60,000 and you wanted to invest that in property, what would you do? So in this method, what I'm going to be doing, what I'm starting from now, I bought 2 properties. What we're doing just now is the BR3 method. The BR3 is just BRRR. I call it the BR3. It's much easier than saying BRR or BRR. So the BR3 method, so you buy, you renovate, refinance and rent it out. That's the 3 R's. So buy, renovate, refinance and rent it out. So what could you do with £60,000? So you could buy 3 properties and put £20,000 down on each of them. So say you've got a house price of £54,000. You could put a deposit down of £13,500. You get an interest on the mortgage at £40,500, which is 75% of the £54,000. Your renovation cost of £5,400, and your legals and tax and everything is £1,100. Even back in 2000, we're going to be conservative and say that's how much it was. Probably less than that. So your total money in is £20,000. Now, you do it up, and then when you've done it up, it's worth £26,000 more. You've obviously spent £5,400 on it, and it's now worth £26,000 more, so it's worth around about £80,000. So you get another mortgage, you get the mortgage of £60,000, you take out your original £20,000 and pay off the other part of the mortgage. So you've got a little bit left in, a tiny little bit. So you've taken out all the money that you put in for all 3 properties. So you've now got 3 properties, and you've taken the money out, the original £60,000. So that's your money, the original 60, but you've got a mortgage of £180,000 for 3 properties. Now for rental, we're going to go historically again. We're looking at historical rent and average it out over the 22 years. So say for example, you get a rental income of £800 per month, which is £9,600 a year. Now what we're going to do in this as well, we're going to allow a 25% contingency. That's for voids. If you've got voids, if you've got bad tenants, or you have to pay out something. And we're also going to put in, for historical figures, just to make this more realistic, the Section 24. Now, Section 24 came in a couple of years ago, which stated landlords cannot offset their profits with their mortgage payments. So you weren't allowed to do that. So if you got £2,000 in rent and it was £1,000 for a mortgage, you can't offset it. So your profit wouldn't be £1,000 as it normally would have. It would still be £2,000 profit that you'd have to pay tax on. So that is a big, big thing. This is why a lot of landlords are getting out just now. So we're going to adjust for that over the last 22 years. So we're going to say, instead of getting 9,600 as a rental income, we're going to say 3,504 as a rental income. And that's, again, being very conservative. But we're going to say that just to make it kind of work for today's kind of figures. The Section 24 that's coming out as well. So 3,504 would give you a rental income per year of 10,512. So you've got a mortgage of 180,000, you're getting rental income of 10,512. And this is you after you paid your mortgage costs and after contingency costs and after tax as well. That would have been a good income back in 2000. So what would happen if we saved that up over 22 years? This is where it gets interesting. So you'd have collected £231,264 in rental income over 22 years. But the value of your property would have gone up from £75,000 each, that's the average house price in 2000, £75,000 to £294,259. That was the figure as of kind of last month. So the value of your three properties is now £882,777. So your total profit after taxes, this is assuming you don't sell. It's assuming so that your total profit is a figure that this is what your houses are worth now. So total profit after taxes would be £1,054,041. Now, if you were to sell all your houses, you would have to pay capital gains tax, so it wouldn't be that figure. So the figure would be less than that because obviously you've got to pay the capital gains tax on the properties that you're selling. But what if you didn't sell? You could take out and refinance all the properties if they're now worth £882,000. So you could take out a mortgage and refinance all three properties for around, you could get back £661,000, pay off the original £180,000, and you've got left to do with what you want £481,000. So that's how much you would have if you refinance the properties. Now, you wouldn't want to sell them because you would have to pay capital gains. If you refinance them, you can take the money out. You'll still have a mortgage of $661,000 and you have to pay more on the mortgage. But your rent would have increased by then as well. So there wouldn't be £800, you'd be getting a lot more. You'd probably get about $1,200 to $1,400 depending what area you stay in. So your kind of yearly rental income will have gone up as well. So you could take out £481,000 and to do with what you want, and you don't pay tax on it because it's a debt you're refinancing. Now, here's the other thing that's totally going to blow your mind. So, what if you reinvested this $10,512 and used some of the £60,000 that you'd already pulled out of the original three properties, and you bought a new property every 18 months? You're not being overly aggressive, but you're buying a new property every 18 months. Here's what it would look like. Property 4, you buy for $59,000, and you're getting a rental income of $3,592. That's after taxes and 25% contingency. And so you add that on to this figure, and you're getting £14,104. And you keep on doing that every 18 months. Pretty soon you've got 17 properties in total. So the yearly rental income would come to equate to $69,841. Actually, it would be more than that because you would be putting your rent up on these properties that you bought at the very beginning as well to be in line with what we're receiving here. So it's going to be a lot more than that. But we're just going to say £70,000 just now. And the total mortgage for all the properties is £2 million. But what about the value of all this? If we look at the value and say, okay, the average value for the 17 properties each is going to be about $294,000, what does that make it? 22 years later, you're going to have collected £578,892 in rental income after tax and accounting for Section 24 monies as well. As if Section 24 was in place in 2000, it would have been a lot higher than that. So the value of all your properties in August of 2022, 17 properties valued at £294,259 is £5,002,403. Now, you could sell all your properties and pay all that capital gains tax, which would be a shitload of capital gains tax. Or, so what could you do with the £5 million? Well, you could refinance. So you could say, okay, I want to take 60% out of the value of this 5 million, pay off 2 million and keep 1 million for myself. So how would that work? So we're going to go to compare the market. We'll start comparison. When are you planning to remortgage? As soon as possible. How much is it properly currently worth? 5 million. How much you have left to pay on your mortgage? 2 million. Say 15 years. And we'll say something like another lender. And we'll just go with NatWest just now. Interest only. 2 years. Financially difficult? No. Would you like additional borrowing? Yes. So we want £1 million for ourselves. On a fixed rate, 2 years, 1 million. See mortgage results. So this is just a rough indication. So we could take £3 million over the 15 years, interest only, and it would be initial monthly cost of 8,600, and that would be for 2 years. Now you're getting 5,800 rental income, but you're actually getting more than that because we've not adjusted for all these early figures going up as well. So you're going to get a lot more than that. Plus, you've really saved up £578,000 as well. Because remember, you're putting into these properties, but you're taking them out because this is the BR3 method. You're taking all the money back out again. So although you're putting in, you're taking it back out. So all this money is really yours, £578,000 saved. So you've got £578,000 plus the 5 million. So this is how much you've got in profit, 5.5 million, because you're taking away the original £60,000. So when you look at figures like that, it's hard to say not to go into property. And this is why I am going into property just now, even though it's probably, for landlords, probably the worst time because of Section 24, because of rent freezes coming up, and because of other things as well. But if you do the BR3 method, then this could still be extremely lucrative in 22 years' time. I wish I'd known about this 22 years ago. Would I have had £60,000 22 years ago? Probably not. But I'm in a financial position where I can put money down in property, use the BRR method and start buying property and use this to kind of look at. I'm not saying in 22 years' time I'm going to have 5 million. I'll probably have more actually if we're looking at today's figures. But this shows you the power of this, and some of the numbers are going to be out, I know that, but it just shows you the absolute power of rental income using the BR3 method. And there's other ways to make more money, like commercial to residential. It's just unbelievable. And there will be changes in property as well to stop people like me buying properties and renting them out. But as long as you're good with your tenants, as long as you've got high spec that you're doing as well, I think this could be an amazing opportunity for everyone for property. Okay, I know that's going to kind of blow your mind, all these numbers, stuff like that. If you've got any questions, let me know in the comments. And as I said, I'm sure I've done some figures wrong somewhere. And there'll be small kind of adjustments I would have to make. And it's going to be a lot more than this you're going to get in rental income as well. So I know that figure should be higher as well. But let me know what you think in the comments. Okay, until next time, namaste, take care, bye now.